You are watching Trading Day. We're watching the energy sector pull back a little bit today, but keep in mind that we've rallied pretty significantly. It took the TSX energy sector to a two-year high last week. When you strip out some of those pipelines and non-oil related names, the oil producers themselves hit around a 10-year high. Patrick O'Rourke covers the sector, and he joins me now on the desk. He's managing director at ATB Capital Markets. Thanks so much for joining me.
Thanks for having me.
So the rally, how great has it been for you guys?
You know, it's outperformed our expectations. I think we were back in here in January with our outlook. We had some concerns on the demand side, and those were clearly maybe a little bit outdone. U.S. seems to have engineered this sort of soft landing with the economy. And as a result, oil's been a lot stronger. You layer in some of the geopolitical things. So interest is clearly there for investors in Canadian oils. I think that you've had the double advantage of strength in WTI, but also an improvement in WCS differential. And so that's driven, cash flow estimates that are about, because there is that operating leverage in the Canadian oil sands, because there's costs associated. We're looking now at cash flows in 2025 that are probably 50% above where we initially thought they were going to be, and the stocks are clearly starting to reflect that.
Starting to, or have reflected?
Well, they have. So, TSX Energy Index is up just under 25% year to date. Taking today out of the equation here, it's clearly leading, showing leadership of the broader index. It lagged in 2023, so some of this is probably a little bit of a catch-up. Valuations still look at these commodity prices pretty intriguing. We're starting to move down because some of the, so if you look at the way performance has rolled out, the oilier you are, the heavier your barrel is, probably correlates with the strength of your performance year to date. We're starting to think about second derivative ideas on this TMX coming on here. So, for example, condensate producers, where condensate differential is still at a decent discount to WTI, and we see that improving in the second half of the year.
So what's an example of a company that would benefit?
A great example of a company that's been a laggard here that has a high condensate cut is a company called Paramount. The company had a little bit of an operational miscue with some well performance that we think is probably well overdone. In the way the equity has performed here. It's, the company has a clean balance sheet. There's a lot of hidden asset value. And as I said, we see condensate differentials going from, say, a $3 discount to WTI today to a premium as we roll into Q4 and Q1 of 2025.
So that's a play. And a lot of the names that you brought today, like a Cenovus, although life came fast for Cenovus, right? It kind of just all of a sudden, after lagging, really perked up, and now it's trading around, the highs that it's seen last year and in 2022. But do you see room to go even higher for Cenovus?
We still think there's another leg to go with that company, especially relative to some of its peers out there. We spent a lot of time, a lot of mind share on the U.S. downstream, where there's been, challenges operationally. There's been challenges with, they are a price taker. A lot of those things are resolving here, but for us, we look at the asset value of this company, and it's driven by very high quality thermal oil sands assets at Christina Lake and Foster Creek. And we thought that was really getting lost in the shuffle here with some of the noise around the U.S. downstream. I think you see a quarter or two of clean operations there. You're seeing motor gas catch up with diesel here as well, and they've got the highest motor gasoline cut relative to their peers. They hit their net debt target at some point in Q2 or Q3 and shift to a greater 100% return of capital. We still think there's some room to go.
So is it fair to say that so much of this rally has been underpinned, obviously higher commodity prices help, but also that religion that you mentioned around throwing cash that you get in the door back to shareholders? And I wonder, can that continue to carry out the day? I've had guests come on and say, where's the M&A? Shouldn't we be, getting back to that? And I was like, do we not remember what happened a couple of years ago? But is that a question that people are starting to ask?
So I think you had another company on there, Tourmaline.
Yes.
This is a company that has executed extremely crisp in the M&A markets. In fact, they did an acquisition in the second half of 2023. But if I think back to the 2019-2020 timeframe when they acquired some phenomenal resource, it was trough commodity prices, a lot of financial distress, and as a result, trough multiples. They were basically buying companies that were on their knees. Today, on the gas side of the equation, which is where they tend to focus their efforts, prices are low, but optimism is high, and financial distress is also generally pretty low. So you have to be a little bit more careful in terms of what you're doing in the M&A markets today. We've seen a lot in the U.S., particularly in the Permian. We've seen some in the Bakken with Enerplus getting taken out. We still think there's a lot to go in Canada, particularly in the Montney, but it's not ever going to be at the same magnitude.
Who would be ripe for that?
We have companies out there that have fantastic assets that probably play into increased demand for LNG Canada. I cover a company called Crew. This is a company that's got a really great asset at Ground Birch. They're running it really well, and I would suggest that just the organic business alone is probably worth it. But when you think about the last shoe to drop in terms of small caps that are available in the BC Montney, this is one where you probably have that long-term optionality.
You probably have good insight into flows and generalist investors, just given your meeting schedule and who's calling you these days. The generalists fully back. Is it still kind of specialist? Any foreign interest? What is it looking like?
We're seeing a ton of U.S. interest, a lot of U.S. PMs. Now, the generalist interest that we see tends to be fairly concentrated at the larger end.
Like a CNQ.
The Canadian Naturals, the Cenovus, the Imperials, Tourmaline Arc, I would throw in that bucket. We're seeing a little bit more work done in sort of the SMID cap space. In fact, I had a meeting this morning, breakfast meeting with a Canadian PM, and he's like, I'm having to move down to find more alpha. So we are sort of starting to have those conversations. A U.S. listing helps for a lot of these companies with U.S. investors, and the interest is definitely there. So I had one producer down in Denver last week, and just a full schedule, large U.S. Pockets of capital, very quick and easy to fill up for us.
All right.